media business, and we'll be launching it for other segments soon. Many customers are in the early stage one usage of these products with us. So that is how we are preparing ourselves for the upcoming cloud wave. And of course, the AI cloud will be another game changer on its own. So this is how we are preparing our business for cloud and edge. On the question of CPaaS, you're right. I think I didn't mention, I think people are, it's public information that some of the major players announced that they wanted to focus on margins. Internationally, we are seeing that play out, but India market is, as you say, is still, I think you use the word cutthroat, and you won't be too far incorrect with that statement. So our positioning in this needs to be, as I called out, to expand to channels other than SMS and vertically expand to software layers above the channels to bring more orchestration, to bring more intelligence to interactions.
Got it. That was really helpful. Just a quick follow-up on the cloud question that I had. So typically we have seen that in any of these technology adoptions, be it cloud or analytics or basically RIMS before that, Indian enterprises tend to basically adopt a new technology with a lag of at least 2 to 3 years. It's historically been the case. Do we see that playing out in the case of cloud as well? Are the Indian enterprise at least, at some years behind their global counterparts in terms of cloud adoption, or let's say in terms of moving to public cloud vis-a-vis the private cloud that they are kind of focusing at this point of time?
I haven't seen the data, but the data clearly is, yes, there has been a lag, but in a way, that lag is good as well, because internationally what we are seeing, people who move to public cloud are now having second thoughts because the costs of public cloud have gone up. It is easy to get in, but there are other costs that hit them as they grow. So I think that should be an opportunity for us to address that properly in the India market.
Sounds good. Thanks, Lakshmi. Thanks for answering my questions. Kabir, just a quick 2 questions. One is, you mentioned that the legal expense cost that has been provisioned up till now is around $1 million yet. So are there any more expenses that we are expecting in the coming quarters, or are we done with most of them? And secondly, last quarter we spoke about basically getting our interest cost down by refinancing of some of the bonds or expensive debt that we have on our balance sheet. Any progress on that, or if you could give maybe some kind of a timeline when we are looking to maybe execute that?
2 things. Look, legal, I can only tell you what I know. If something comes up, I hope it doesn't, but if something comes up in future, then it comes up. So I can't speculate that for now, Vibhor. So these are, all of them are in public domain. There's nothing which is not privy to all you guys. I'm sure you've searched out, you'll know what are the things that are there from Kalera, whether it's the warrant holders or otherwise, which are in there, which we need to defend, which we will. On the refinancing part, yes, we will be doing it. It'll be imminent, anytime soon, and once that is there to be declared, we will come out. So we are looking at we've already signed, or rather with the consortium bankers in terms of when we will do, and we will execute in the next couple of weeks, and when that time is there to announce, we will announce that as well. And you're absolutely right, it will be refinanced at a rate which will be more attractive than what we did the lines of credit when the 200 million refinancing we had to do for the bond repayments that we did in the end of November for the Kalera bondholders.
Got it. That's great to hear. Just last thing, I'm assuming the guidances for FY27 in terms of doubling our data revenue, margins, ROC and leverage, they all remain intact.
Absolutely, they all remain intact. As I mentioned in my speech, we will get the debt to the leverage ratio much faster. In fact, we made a marginal improvement. Last quarter was 2.2 2x, 2.21. This quarter is 2.16x. I mean, in FY25, it will come under 2x. So that's not an issue. ROCE is not yet bottomed out because it's a 12-month trailing. That's the formula. So you will have 2 more quarters where you will see a little bit of a deterioration in ROCE, and then it will start coming up. So that will happen the following year. And EBITDA will be the last one to come back to the range of 23 to 25. Completely committed on all 3 parameters as it stands today.
And the growth as well, doubling of data revenues.
101%, yes. That's the main and the most important one. Completely committed. You know, Lakshmi made it very, very clear. We remain confident of the opportunity we have. We remain committed to doubling our data business.
Got it. Thank you so much. Thanks a lot, guys, and wish you all the best.
Thank you, Vibhor.
Thanks, Vibhor. The next question is from Sanjesh Jain from IC Securities. Sanjesh, you have been requested to unmute. Please unmute yourself. Go ahead and ask your question. Yeah, Sanjesh, please go ahead.
Yeah, can you hear me now?
Yes, Sanjesh.
Yeah, thank you. Thanks for taking my question. I got few of them. Lakshmi, first on the digital piece as itself, it appears that the entire segment have significantly slowed down, and now we are at a 5% YOY growth. 2 quarters back, we were at 24% growth. There's a material shift in the growth rate, what we were looking at. And we were hoping for an acceleration with a solid funnel and the order book we have today. So how does it look for FY25? Where do you think FY25 we will land up with whatever order book funnel we have today? Are we confident of delivering a 20% plus growth next year with the order book and funnel and the visibility we have today on this business?
Yeah. So Sanjesh, on the digital, I have been calling out on the order book. We have said that our funnel is good, but the order booking is slow. And that is what I had called out, and I'm still in my commentary. There is slowness in decision making. The only thing that I would contrast it with saying that in our enterprise side of the business, we grew close to 13% in India and a good double digit in the international markets, despite the conditions of macro conditions that the enterprise business in the international markets face. On going forward basis, I think there are a few things that we have to keep in mind. You know, it's not as though the macro conditions have suddenly improved. If anything, in the US, with inflation and the possibility of interest rates not coming down, there is going to be more caution, and the other geopolitical Middle East conflicts that are there. So the caution is going to be in the air. So I think there is no doubt. I think the bigger picture that I see in all my interaction with the customer is, are we, the proposition that we are making to customers, is that appealing to customers? Are we now able to engage at senior levels with customers that they see the attraction of the platform? I think clearly yes. Our awareness in the international markets is still very low, and we are trying to increase that awareness. And with increasing footprint of sales we have, that alone is not enough. I think we need to do a lot more. Our participation levels will increase as the macro conditions increase. So, that's the opportunity for us. Is the need still there for customers to transform the network? Are we still relevant in that space? We are very relevant, especially with our new products of cloud networking. There is even more relevance. And to call out our of 30% this year.
Okay. That's fair, Lakshmi. Just stripping down digital a little bit more. Within the 4 sub-segment, where are you more confident? Is that next-gen connectivity? Are we more confident, or cloud hosting and security? Because these are the 2 lines, as you articulate, looks to be much more on the stronger footing than the remaining 2. Will that understanding be fair?
Yeah, I think next-gen connectivity, clearly, we have seen the growth, and even there, as you called out, the momentum of growth in the last 2 quarters had come down. The characteristics of next-gen connectivity is the the time period from order booking to turn up of the revenue is a bit longer because we have to implement the network. Implementing SD-WAN across multiple sites do take time. So the time taken, but if you ask, that's a large portfolio, and that growing will help us to shift the needle. So we are clearly focused there. The cloud and security is also large, but the cloud is largely in India. Security is a mixture of India and international, and we are doubling our focus in the international markets by taking some of our cloud SOC opportunities there. So that is a critical opportunity. The third is the interaction fabric, because we have invested in Kaleyra. We see a lot of excitement from customers because Kaleyra has a powerful platform. And combined with the brand of Tata Comm, there is a lot more confidence in using the platform. So we see a lot of opportunity with customers. And as I said, we are going to be further investing in the platform. Besides realizing all the cost synergies that we see, we further invest in the platform to build out the software layers for orchestration and intelligence. So that is our third. The fourth is IoT fabric, and Sanjesh, there, they are, we have start. I don't want to call out any particular fabric to say they're going to be focusing more and less there. All four are equally focused. They are run by separate teams, and we are allocating Thank you, Sanjesh.
Sorry, yeah. I think there is some gap in between. There were blanks, but I got the broader message. The next question on the India business, Lakshmi, that looks like has significantly deteriorated or decelerated to 5% kind of a growth. I hear that there is an increased competitive intensity in the Indian market. Do you believe next year could be a fierce competitive year and India market may struggle to grow? Do you see that scenario panning out?
I have called out India. We have grown 13%. So I don't know where
revenue into enterprise market.
The enterprise.
So the 13% is only for the enterprise, Lakshmi. I guess overall India piece has grown only 5.8% YOY.
Yeah, so that's why I did call out the service provider and the OTT segment there. With in the OTT segment, we put large hyperscalers and others into that segment, Sanjesh. And there, I think the context is these people had invested in a lot of capacity during COVID and post-COVID, and there was some moderation, and it should pick up again with them investing in more data centers. It should come back up again. So I think that's more a cyclical nature. But the focus on enterprise is the topmost focus, and we are very happy with the 13% growth. I think we can do more with our expanded portfolio, and we'll be pushing for accelerating that further.
Got it. I got one couple of questions. Sorry for you, I'm pulling it a little bit more. But on Kaleyra and Switch, what has been our YOY growth for us, because we don't have a comparable number for last year? Can you help us understand how have we been growing on those both businesses?
Sanjesh, let me chip in here. Although we call out underlying data revenue at 8.8% and including acquisitions so much. If I have to be honest, about it, and this Lakshmi alluded in his qualitative, description, we are running this business as an integrated business. So let's say Kaleyra, right? We are stripping out, all of Kaleyra's, numbers as acquisition and reporting the balance as underlying, which is a little unfair. Why? Because we had a DIGO funnel, which before the acquisition. And now we are looking at which is the best way, to serve our customer. And in majority of the cases, we are going, as Lakshmi pointed out, we are going with a Kaleyra paper, right? we are selling that product. So, and the same with Switch as well, right? We are going in a combined way together. And even from an org structure point of view, we have one common leader for these businesses who are looking at these products as one integrated offering, to the customer. So after a point in time, we're like splitting hair, to then say, what will be separately this growth without that and stuff like that. I mean, I'm still reporting it for better governance and transparency to the street, because one of them, came to us with money having been paid to acquire that capability. For 12 months, we will have that, and hopefully Switch, that problem will stop in May. It would have completed the 12 months, and we will get onto a completely regular way of reporting growth. And it will take 6 more months for Kalera. And in Q3 of FY25 onwards, then you will see all that completely normalized. So it's a little difficult, for us to peel that out.
No, got it, Kabir. My only intention of asking that question was to understand with Kalera in place, because that's a heavy portfolio. Will the 20% growth become a difficult if Kalera doesn't grow by 20%?
Life is not easy, Sanjesh. We will.
No, because we are just hearing that globally the CPaaS business has been
I know.
slowed down.
So I think the market, we can only keep an eye on the future. My belief is that the B2C players, their interactions with the consumers are not going to decrease. There is going to be more channel diversity. That is what is going to happen. SMS will decrease today. 99% of the interactions or 95% of the interactions are all on SMS channels. That will diversify into other channels, and as I said, we have already diversified into other channels. We will further diversify with other capabilities there, and we have to build out the stack on top, which is where more value-added offerings will be there for customers, and that will also help us to deliver better margins in the platform. So that is what we need to do. So in the long run, I don't believe the interactions with consumers are going to be reduced in any form or shape. It's only going to be increasing. Only the channel diversity is going to happen.
No, fair enough. Just one last question from my side. We are today at 18.6% margin. The ambition is to be in 23 to 25 range. Can you help us understand the bridge? What is going to drive, or what are the levers for the margin we are looking? Because the mix is only going to deteriorate towards more digital in terms of margin profile. I understand ROC profile will improve, but what are the levers are we looking where we already have few tracks on the margin?
I will take that, Sanjesh. Sanjesh, we are confident we will get back to the 23-25. Multiple moving parts within that. First and foremost, you should see a good improvement in FY25 itself. So this is all not back-ended to FY27. So we will see that already, next year, a little bit of an improvement, as Lakshmi called out. We did spend money on M&A, not just the impact of the acquisitions, but also cost that was actually spent on due diligence and fees and stuff like that. So those elements will come off, which are not going to be there. Second, we are obviously spent a lot of money in terms of our organic investments in the 0, 1, 3 stage. Those should give me operating leverage, as well, and that should come back because I'm not going to continue to spend money on them. I will be looking for growth and revenue, coming in from there. So the NR margin should directly flow into LOB, into EBITDA. So that's, I would say, the second lever. And the third one is, you've seen, we've done some strategic review, took a hard call on one of our subsidiaries, TCTS, on getting out of an onerous contract. Our TCPSL business is doing well already. We've moved the profitability needle up significantly. Likewise, there are other elements also which we will be more sharper focus there. and sweat it out. So I would say multiple such levers that we will play into picture and bring that entire thing.
Got it. Do you see net profit margin improving, or you think it will be below the net profit? The leverage will be more for us.
Sorry, you when you say net margin, or you mean PAT?
Net revenue margin.
See, net revenue margin, your point is right. Net revenue margin will have the dilutive impact of the change in mix as we drive digital portfolio harder, right? Because they come at a lower net revenue margin compared to the core connectivity business. So there's going to be headwind, and the way in which we are managing is that inter-business headwinds, the businesses themselves need to take care of. Intercompany, within the company level, what headwind is there is what should get offset by the operating, leverage. But as we mentioned earlier as well, we have a glide path for each of them. Now the glide path is whether it is organic operating leverage or whether it is cost synergies coming in from the M&A or revenue synergies then flowing in, into margin. I think all of those levers are there by product category, and we have even broken it down, to a more granular level by drivers as well. And that is what, the governance that we follow to get them to the destination margin.
Fair enough. That's great. Thanks for answering all my questions. Best of luck for the coming quarters.
Thank you, Sanjesh.
Thank you, Sanjesh.
Thank you.
The next is from the line of Mayank Babla from Inam AMC. Mayank, you have been requested to unmute yourself. Please go ahead and ask your question.
Yeah, hi, am I audible?
Yes, Mayank, please go ahead.
Yeah, thank you for taking my question. Sir, a while back you had announced that Tata Comm's partnership with NVIDIA. I was wondering if you could give us some detail about this partnership, the nature of it and the scope or potential it has for us. Thank you.
No, I won't be able to give a lot of details at this stage, Mayank. What we are doing is, there is a solid partnership that is emerging. We are working very closely on the various aspects of the architecture and the build out, and we will be preparing ourselves for the launch during this year. And there is a lot of good interactions that happen in terms of the use cases and very many things. So as far as our ambition is concerned for AI cloud, we believe AI has a huge potential, and in India particularly with the launch of our AI cloud, we will be able to help and move the needle for, the government has announced, a huge commitment to use AI as well. A lot of startups and enterprises, they have to go through the maturity curve from the hype that is there today to actual use cases and training with the data, get more data discipline and make use of all of these. So there is a big potential, and we think that even the AI cloud, even though it will be built in India and launched in India, there is a potential for even international customers to use this in due course. So we are quite excited about the opportunity, and we are working very diligently in going through all the details, making sure the launch is successful.
Sure. Thank you so much and best of luck.
Thank you.
Thanks, man. The next question is from the line of Mr. Gautam Rathi from Chanakya Wealth. Gautam, you have been requested to unmute yourself. Please go ahead and ask your question.
Rathi from Chanakya. Lakshmi, I think I missed the number, but you said that you added the number of new logos you added. You gave a percentage. Could you just help us understand that? Did that number was something like 90%?
Correct. I know I talked about the revenue growth in new logos is a 90%. Now there are a few things we have done. From the sales teams, we have brought about a team that focuses purely on going after the new logo, and that has helped us in a way. and that focus helped us in acquiring new logo. And secondly is the quality of the new logo that we get as well, in terms of what revenues we get. So that's been a change that we did last year in terms of how our sales teams got organized. And that is what I was reporting as. And I think the one thing we have to keep in mind is, it's starting off from a fairly low base, but it's delivered good results as a result of the focus that our sales team has brought about in new units.
And Lakshmi, if I understand it right, what you're basically telling us is that the more structural part of the business, which is your enterprise business, is seeing decent traction and is growing well, though you would want it to go faster. But it is the more cyclical part of the business, which is kind of right now a bit more impacted. Is that understanding right? And historically, when you must have seen many of these cycles. How much time does it take for it to come back, and can it come back pretty strongly whenever it does, when these cycles correct?
Yeah, I think your observation is very spot on. I think the enterprise business, both in India and internationally, is quite good. And as you called out, it's not as fast as we would like it to be, but it's still seeing good growth. The growth got pulled down largely from our OTT and the service provider segment. I wouldn't call them cyclical, but what has happened, especially with the OTT segment, is as I mentioned earlier, I think there was a lot of capacity that they had built, and also last year they focused more on their build out of data centers and others, and therefore the growth on the network side didn't happen for us as much as the previous years. And also the OTT business, in some parts we also had the messaging business, which had some cyclicity. The other part to the question is also, if you look at our portfolio, the next gen connectivity had very good growth. The cloud and security also had double digit, even though it's not as much as in the past. The collaboration, as was observed earlier, has been static, and there are many moving parts in there. We sort of revitalized that portfolio with a very combined Global Rapid, which is a GSIP, a Cisco, and a Microsoft. There are moving parts in that business that happens, and we were prepared for that business to be of a lower growth, which is why we started investing in DIGO at that time, and therefore we'll focus more on the customer interaction side. On the Global Rapid side, we believe the growth will come back. We've also invested in and launched on a product called Jambi. They're all in very early stages, so they should come back. So each of these portfolio has a different rhythm within our company. Some of them are affected by the macro as well. So it's a combination of factors. But as I called out, the four fabrics in the company, we will continue to invest in all the four fabrics. The big chunk of focus needs to be in the international market, which is where there is a lot more of headroom for growth purely by the size of the market. But the international markets also have strong incumbents, and we are looking to replace the incumbents through the power of the offer that we have and the capabilities that we bring to the table. And we are seeing that steadily happen. Clearly, with our brand, as I said, the awareness levels are very low. I mean, interestingly, in one of the products we did a test, and the awareness levels are low. And I think we need to improve our awareness levels. Despite our investments to increase the sales headcount and the strength there, it's nowhere sufficient to reach the full aspirational potential. And therefore, we will be increasing our marketing spend. We will have to continue to spend on the sales and increasing the capacity of the sales, and gearing our teams to do more larger deals, which means that they do take time to to shape. They do take time to close. So we will have to get used to all of these cycles, but the opportunities are there.
Sure. And Lakshmi, just wanted to understand, like some of the deals, is it possible that there are certain deals that have been won which are because of